Good morning, everyone. This is Brad Matheny. Today's the 30th of May, Friday. Happy end of May. This is the Plan Your Trade video for May 30th. And I'm running a little late today. Slept in. Don't know why my alarms didn't go off, but whatever. Another day. Just get up and bend with things instead of break with things. So I didn't update these charts today simply because I'm running behind on things. Didn't want to take the time to update everything. So we're looking at a crush pattern after yesterday's fairly good sized move. Now, a crush pattern is normally a fairly good sized down day. So this is the SPY 1 hour. Let's take a look at daily. And where we're at with the crush pattern is typically a fairly strong breakaway type of a day. So the idea of a crush pattern can typically be seen as, maybe something like this, or maybe something like this, a fairly strong down day typically, or maybe something, like this. Typically, this is what a crush pattern looks like. So, wanting to find out what's going on, someone's messaging me here, private message. So, with regard to the crush pattern today, I am expecting a fairly strong downward type of a trend, possibly moving back down into this lower area of the consolidation, maybe into the 580, 581, 577 area, maybe. Again, that's what I'm expecting. Now we have to look at this from a point of failure or succeed. So we come over here, we zoom out the chart. This is a 1 hour chart. This would be a very big move. So if the crush pattern sets up, like I expect, we would be looking for this gap to fill from the last couple of days downward, maybe setting up a selling zone, down into this area, maybe stalling a bit. So that puts us in the 583 area. That would be a 5-point drop. That'd be just under 1%. Could be much bigger. Could be a 2% drop down into 10. So 580, 570 down in this area. That would be a 10% drop. Sorry, a 2% drop. And the way I'm looking at this is just basically 1% is five, roughly $5-6. 2% is 12, 10, 12. So if we do, when we fill this gap and the crush pattern shows up, we're going to be looking at a downward trend. Okay, we are going to be looking at a fairly large downward trend because of the crush pattern. Now, opposite types of crush patterns have happened too. So you could get a failure to the upside. And I think if we were to break out to the upside, which I think is unlikely, you would have to be looking probably somewhere around this upper level, this rejection level here. That would be 591.84. So let's call it 592. If we were to get a breakaway to the upside, you'd be watching this 592 to 593 area as upward breakaway. And if we were to get a breakdown, meaning the markets really start to tank, you would watch this lower channel here. Oop, back there. And the upper part of this window. And so you would be watching the 586 and 584.25 area. And I really do believe this breakdown is more likely at this point in time. It sets up with my rollover top. It sets up with the crush pattern. So this is the more likely outcome to the downside. And this would be a rejection or a failure of the crush pattern to the upside. So pay attention to the fact that you have really a fairly large breakaway type of a move happening today. If it shows up, to the downside, I expect we're going to be down to 583, and that could push us all the way down to fill the gap today, down in this 589, 579, 578. If it fails and rallies above this 592, 593 area, then that would be technical failure, and we would be looking at an upside crush pattern, which I think is unlikely, 10 or 15 or 20%. Okay, let's go take a look at gold and silver real quick. Gold and silver patterns, again, didn't change these as of yesterday, is looking at a Gap-Stall-Revert-Flush. Now, a Gap-Stall-Revert-Flush is kind of an interesting pattern in the sense that can either gap away and stall and or revert to a normal mean level, and or flush, meaning move somewhat like a crush pattern. A flush pattern is somewhat like a crush pattern in the sense that we could be moving in a broad, big broad trend. So now, this is an hourly chart. Sorry, this is a 4-hour chart. This is a 4-hour chart. Let's go back a little bit, take a look at some of these trends. First thing we're going to do is go to a linear regression channel. We're going to come off of this low up to where we're at right now. And a regression move would put us up in this area, 3360, 3370. A regression move of this channel would put us up into the 3370, 3380, 3390 area. I'll make that yellow so you can see it. And a larger regression from the beginning of 2025, let's say, all the way up to now. Puts us at a regression up into the 3400s here. And from the beginning of 2025, off of these lows, coming over to here, that puts us at a regression pretty much right where we're at right now. So what I'm doing is I'm using linear regression to try to show where mean, a reversion to the mean may be. What we're looking for is a pullback to normal price areas. So given this range, we're right at, in gold, we're under the reversion mean level, meaning we have a little bit of a melt upward. And in silver, we're kind of right at it, just a little under it on the shorter term reversion. So in relation to upward channeling, we have a move potentially up into this area, this yellow area today. And with gold, we have a chance up into these two yellow areas on a reversion pattern. Now, a thrust or a flush pattern, which is here, would be even bigger, potentially to the upside. So in that regard, we could see a very big move potentially up into a much larger breakaway type of a range. Could be something that sets up today, maybe up into the 33.80, maybe $34, maybe closer to $34 for silver, maybe up into 3,400, maybe up into 3,420. Move to the upsides. Very positive, I think, for gold. Like I said, I've been looking for this kind of flagging breakaway trend to happen for quite a while. And it looks like we may be finally at that point of a breakaway move. Now, additionally, gold moved into a very strong trending mode in my TT scanners. This is something that you guys don't normally see. It's members only, subscriber tools. But notice GDX, GDXJ, and Nugget all generated new long triggers yesterday, all with pretty healthy thrusting patterns. And with this 5 over here with the bull bear score, we're in a pretty solid uptrend. So we may end up getting very good follow through to the upside. And again, I really believe that these TT scanner triggers are the bread and butter, really, for traders. If you want to just watch triggers, this is not a lot. It's about 25, 30 symbols in here, but this is an unlimited amount of opportunity for you. You can see some of these moves in Bitcoin daily, 12%, QQQ long 11 days, 2.2%, XAR long 22 days, 12%, AIQ long 11 days, a full percent. QQQ looks like it's in here twice, 2.21%. These are really daily, and 60-minute triggers are just, in my opinion, fantastic. So the fact that we're getting the miners generating new long triggers while gold is moving through a potential uptrend is very, very positive. Lastly, let's take a look at Bitcoin. Broke down. Let's go to daily. Now, I've been warning about a potential breakdown, and I highlighted this 106,700 level. And then I told everyone that really the 103 level was my final defense level for this move. We've obviously broken down out of this lower channel. You can see this lower channel moving up. That's the standard deviation channel, okay? And, it's gotten to the point here where we are, even moving into the last day. We've broken down out of this channel. Now, we've got to watch for rejection. So understand that we could get some sort of rejection here back to the upside. Not saying that it's guaranteed to go down, but at this point, failure of any rejection, meaning a continued downward move below the 103 level, would indicate a very strong potential breakdown. And I think that's kind of where we're headed. Now, ultimately, I would see, trying to move this so it doesn't get in the way. Ultimately, I would be looking for, rejection here and consolidation. Now, there's two things that will likely happen if we break down. So let's talk about an if, what if kind of a scenario. And that is that we're either going to attempt to break this low down here, and that low is going to be our most recent standout or unique low, meaning that this is the lowest low that we've had in Bitcoin in some 35, 45 days, maybe longer, and or it's going to stay in this middle channel. So if it breaks down and fails to come down to take this, we're looking at a breakdown into consolidation, possibly, and then into some ultimate low. That would be one scenario, a potential breakdown that does not test this lower low around 75,000. Whereas a bigger, broader breakdown would be a breakdown below that lower low of 70, call it 73, 74,000, and tries to move into consolidation over here. This is the same type of consolidation. So here, sorry, I didn't mean to create an infinity loop. Here and here is the same consolidation. The difference is, do we consolidate up in this area and then move into an ultimate low pattern, which may then set up, a bigger, broader type of an excess phase peak pattern here. You can see we've got this excess peak pattern here setting up. Do we set something up like this and then break downward into this? Or do we just continue to trend down into this lower low? So that's kind of the big question in my mind, guys, is how is this going to play out? If it breaks that 103 level, is it going to be a straight shot without consolidation, breakdown, or is it going to be more of a moderate trend phase coming down, rolling into consolidation again off of these lows, this support level? You can really see the support level right back over here. And that's really that Fibonacci level that I try to teach you guys, that 75 to 835 area. That's what I call the trigger level. Okay, so when we get down into and below, that's why this level, 102,794, that's the trigger level. Between 105,447 and 102,794, that's the trigger level. Down here, the next trigger levels 85,400 to 80,700, almost 800. This is where I would expect price to come down and stall, or attempt to stall, and maybe revert back up to the upside. So failure at this level right here, this blue level, which I will make, I don't know, some bright yellow, I guess. That is my next target if we get this breakdown. I would expect the price to come all the way back down to retest this trigger level, or potentially this 50% area, which you can see how I drew perfectly in this 50% area as a stalling pattern. So we'll see again how things play out. Right now, Bitcoin's up 153 bucks, and markets are generally kind of flat right now. So we'll see how things play out. Okay, 16 minutes. I did pretty good. Happy Friday, the short video. Go get some. And remember, take every day as it comes, guys. Protect capital, stay fluid, trade with the market, and go from there. All right, guys, thanks a lot.